Hello everyone, it is Evan from the Trade Risk on Saturday, August 29th, here with a market recap video. We are first going to analyze the current state of the market. We're going to look at some other markets, some leading sectors, and then finally some trade ideas heading into the week. Now, before we get started, I just want to remind everyone, if you like these videos, if you like some of the content that I put out, make sure you're on the newsletter I put out. It's free. Go to thetraderist.com. You can sign up on the homepage or go to thetraderist.com/join. It's a weekly newsletter I put out. I try to do some unique content in there, some of my favorite trade ideas, and just general things that will prepare you for the week ahead. It goes out every Sunday evening. So if you're not on the list, you like some of these videos, I do suggest that you do get on that list. So let's jump into into this week's action. It was I would go as far as saying a historic week. It's one of the most, one of the wildest sessions I've ever traded. I'm talking about Monday specific. Let's take a look at a daily chart first. You can see what this session looked like with this here. It was quite a move here. The prints on the lows here, in particular, the first 10 minutes of the trading day, they happened really fast. And this was the reason I go on to say it's a potentially historic day. It's just the general prints across such a wide array of names, and even some of the biggest names with the most liquidity. That first 10 minutes of the day on Monday, 20 minutes of the trading session on Monday, we saw some really incredible prints. And I put out a post showing just some of how far some of those stocks were down in just like a 6-day stretch. And we're talking about names like Apple, Netflix, some of the big guys, GoPro, FireEye, a lot of those names were just down tremendous amounts in that opening, session on Monday. And given that washout, given how stretched we were coming into the day, with that gap down on Monday, we did see a fierce snapback, and it's amazing to see that the S&P 500 closed up 80 basis points, just about almost 1% on the week, after being down right here at these lows at 182. That was down about 7% on the week. So it was a very, monstrous reversal, and some will say this is definitely the starts of a V-shaped rally, potentially just onward and upward from here. We're going to talk about that in just a minute. I think, coming into this week, we were definitely oversold. Just ending Friday's session where we ended Friday. This was this candle here, kind of overshooting this 198 level, which held as the lows of the year and support for most of January and February. Just going into the weekend, we were already stretched to the downside, and then tacking on another 7% at the lows was just a very just had a lot of pent-up energy to the upside, just given how stretched we were. Now, let's talk about the bounce. So we saw a nice bounce, in particular Thursday and Friday. We saw some really nice moves here, and we are now back to the breakdown level. So we're back to this zone right here. We overshot it a little bit, but basically we're right at this level that held as support for January and February, and that's a very important level. You'll notice that the fast-moving averages are still racing lower. There still is definitely technical damage here. We are in the process. We have, what we could start to see. We don't have. We had a break of this range, but we don't quite have a downtrend just yet on this time frame. We have, this pivot here. We have a pivot low down here. Now, if we start to roll over here, we'll have our first lower high. But if you consider 210 up here, the first pivot high that you're looking at, you got your first low. So we're waiting to see what happens here, and I think we're at a very interesting level here. You have something for the bulls and the bears here. Of course, we did close the week at the highs. Going back to that weekly chart, very constructive, but we are at a very interesting level, and I'd say that we now worked off a lot of those oversold readings, a lot of that stretched action to the downside, this washout that we saw. We got rid of all of that. We bounced nicely. Now I think this is where the real tough work starts to happen. I think if the bulls can continue to pull us higher from here, it's going to be very, very constructive. Right now, it could go either way. I think the breadth on Wednesday and Thursday, so on these 2 days to the upside, was very impressive. There were a ton of stocks moving on the upside, a ton of advanced decliners, advancers to the decliners. So I think that was very constructive to see a lot of stocks participating in the upside, but I still have to respect the damage that has been done. This could easily turn into just a bear flag here. Perhaps we need to come back down and just fill this in a little more, retest the lows. I'm not, anything can happen, or we can continue to turn this into October of 2014, which is right here. And this was, one of the biggest V shapes that we saw rallies for this whole bull run. I would say is just this completely oversold washout, just like we saw essentially, and then we basically just didn't stop looking back, and the bulls just took us higher, 15% in a straight line, or whatever the real number was there. So that could be the very bullish scenario that is about to repeat itself. So tough to say. I think right now it's very tricky here. I don't think there's a tremendous amount of directional edge one way or the other. I think we're in sort of a pretty interesting inflection area. Like I say, it's got something for both parties here, both the bulls and the bears. So I think that's the way I'm reading the market. Hell of a recovery, still respecting the technical damage. Oversold readings are gone. So we're just back to a sort of a neutral market, and I'm waiting to see sort of next week which way we start to tip. If we look at some of the other indices, we're all, it's pretty much a similar camp here. We had the real big washout on Monday. We continued to basically bounce for the rest of the week, and we're now back. This is the small cap, the IWM. We are now back to the early years support levels, just like we are in the SPY here. We closed strongly. Same scenario there. The Qs, they are leading us here. They already are above firmly the lows here from earlier in the year in 2015. They're back up at 105, so they're challenging sort of these April lows, if you will. They're on the next level. If you look here, they closed up 3% on the week, so definitely recovered a lot more of the downside action. The Nasdaq, the Qs, definitely where we saw a lot of that snapback take place. Now let's look at some other markets. TLT, not a good week for bonds here. If we look at a weekly chart, you can see it's a very big bearish engulfing bar, and I think that's very negative implications for this market going forward. We were in this downtrend from ever since the beginning of 2015. We were basically trending down in bonds. We saw a nice retracement higher over the past couple of months, and now this week really kind of perhaps gives you some confirmation to the downside that maybe we are going to see this trend resume to the downside once again. So definitely something to keep an eye on. Not good action there in bonds. We'll have to see what this week brings. I know there's a lot of talk about the FOMC minutes coming up and what the Fed decisions are going to be with rates, so I think that'll be very interesting coming up. Oil, this one finally had a really nice day. If you look, really nice week, I'm sorry. A nice bullish engulfing bar, basically the opposite of what we just looked at with bonds. This has been in, of course, a monster downtrend since July of 2014. Recently, back in July of 15, just a couple of months ago, it started to roll back over, take out these previous lows at 1650, and now this week we saw a really nice bullish reversal. I don't look at volume too much, but I know it did come on some very strong volume, and this looks good. This definitely has the signs of it that it is potentially put in at least a short-term bottom here, and that's definitely something you can trade against. Of course, you got to understand that there's a ton of technical damage here. Fast-moving averages are still racing lower, but I do like USO. I actually did take a little bit this week. We got some exposure on the long side here, so we are playing for some continuation to the upside. I don't think it's going to be a very clean move. I think we could be in for a bumpy ride, just like I say, given how technically damaged this market is. But I do like what we saw this week in action, so I am long it, looking for some continuation there. Next is UNG. This one's still hanging out at the lows here. 1250 are still holding as the lows. It didn't quite take them out. Even on this past week's action, it stayed really tight on the lows, so that is pretty constructive for the bull case here, that we didn't get a washout. Or maybe if you're a bull, you wanted to see a washout happen and then a reversal take place, but we didn't undercut those lows. We are trying to hold up here. Do think that's constructive. I think 1250 is definitely a very clear line in the sand for this market, so I think you can continue to use that one going forward. Get into the metals now. Gold. had a nice nice end of Friday was up, but the week in general down 2%. Not so nice. You can see on a weekly chart, still in this kind of messy, just sliding downward, trending, you know, barely trending market, just kind of rolling over here, dripping sideways. So not that interesting. It's got a big level 110 right above it. Needs to clear back above that to start to get more interesting. Otherwise, gold still just doesn't look that clean to me. And silver's in a similar situation. This one was down almost 5% on the week, so a real ugly session. Took out the previous lows, made new lows, but then it recovered on Wednesday. So I'll have to see what silver does. Still a mess. I think it still favors the shorts for now. Needs to clear back above 1485, take out some resistance, and then that one might start to get a little more constructive again. So when we look at the overall sectors this week, IBB, this was a strong one. This one ended up closing 4% on the upside this week, which is just very impressive given where it was, especially on Monday. Such a sharp bounce back higher. So definitely a nice pull, a nice step up for the bulls there. Energy, like we talked about with USO recovering, crude oil recovering. This one was up 3.5. This sector, very constructive. Again, still damaged charts overall. I mean, especially XLE is a very damaged chart, but a nice snapback. The one I was really surprised with was the semiconductor index. This was up almost 6.5% this week, which is very impressive. Again, this one's been beaten up quite a bit, so I think the oversold conditions, the real capitulation happened in this market. I could potentially say the same for energy, but really the semis performed pretty extraordinary this week. So that's definitely something I'd keep an eye on going forward. Maybe you got a little bit of a changing of the guard there. And then just technology in general, XLK, like we talked about with the NASDAQ, with the Q so strong this week. This one also finished up 2.6% this week, so very impressive after everything was said and done. Now let's look at some other markets, some trade ideas for the rest of the week. CDW is the first that we have to look at here. This one's at all-time highs. If you look on a weekly chart, this chart looks very, very good, almost like you wouldn't even know that we just had, you know, overall a 10% down move, you know, a correction in the market, because it is just still sitting up here at all-time highs. Nice closing, weekly closing high, filled this gap from here. This one looks pretty good going forward. Next is INCY. Again, this one's at all-time highs as well. This is in the biotech space. Really big. Look at this engulfing bar that it had for, you know, basically engulfing the past 4 months action. It's just really impressive. Not quite this topping tail here, but more or less this was a very impressive move. 2 all-time highs, I think. You know, this one looks good. Look for this one to continue higher, up 15% this week. Perhaps a little stretched, but definitely where a tremendous amount of strength is. Next is MRKT. This one, not the cleanest just yet, but you should definitely keep an eye on it. Look at this weekly chart. Really nice. Recent IPO, really nice tight range. Had a monster expansion bar out of here just 2 weeks ago. Now it's trying to retested the breakout level it held. Closed down on the week, but still this one could get really constructive here. It needs to get back above, you know, at least $29 or so. It could be off to the races. And then finally, JCPenney. This one, had a lot of good luck trading this one actually, and this one popped back on my radar. This one up 10% this week, so a really nice recovery, and it's back to this $9 level. This has been a tough level for it. Hasn't been able to spend much time above it for basically 2 years. We had a little bit of a stint here at the end of 2014 where it popped up, but then it quickly rolled back over. So most of the volume's taking place under $9. I think if you get it back above, you know, 9.25, if it starts clearing those levels, I think you get JCP back in motion to the upside. And that is all I have for today. So I hope you enjoyed the video. Again, if you're not on the newsletter, head to thetraders.com, sign up for that newsletter. It goes out tomorrow. And as always, thank you for watching, and I will catch you next time.